Hello and welcome to the stock specific class here for Thursday, June the 22nd. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. All right. Got a lot to cover today. There's we try to cover most of the market update on Tuesday, but remember, we didn't have a trading day on Monday. Excuse me. And we had a bearish reversal candle on Friday, so we kind of needed to see how things went a little bit this week. So we will spend a little bit of time in going through kind of a market update before we get to some specific stocks as well. We got a little bit more data here to kind of go on. Not as much as I was hoping for by Thursday, but it's a short week and everything gets kind of screwed up on a short week. So as far as the direction alerts, with a little bit of the pullback we've had this week, you see momentum is backed off of that extreme reversal risk range. It's come back a little bit, so the market is not as stretched in the near term as it was. That's what you expect to see when the market pulls back. Now, remember, this doesn't tell you how far a pullback can happen. Does this mean that the market? This could mean the market could start to rally again because it's backed off that overbought condition. It could mean that it has further to drop. The momentum indicator could swing all the way back down to this extreme level and be oversold. So just keep that in mind, that the only thing we're looking for with these direction alerts is extremes. Are we at an extreme range? And if we're not, then it's really not telling us anything that we need to pay attention to, and then we move on to the charts, where the chart's showing us as far as should the trend continue or not. Breadth is still kind of in the middle, and that again has been something that's bothered us for a while. That the market has rallied with few stocks, and we are seeing more participation than we were, but we're also seeing kind of a rotational type move where it's still a concentration of stocks, but it's in a different sector. So it's kind of gone from the mega cap tech stocks, and it's moved over into some of the other areas, but it's been very concentrated still, focusing a little bit more on the leading stocks within some of those other sectors, and then it's kind of been rotating back. We're starting to see kind of a rotation back into, possibly into Google and Amazon again today. We can take a look at those when we look at the, we'll see if we can get through the mega cap tech stocks as well. I was going to do that on Tuesday, and I didn't have time to go through that, but we'll take a look at it. And then obviously sentiment is still extreme. Buy-sell ratios have come a little bit closer together. They weren't too stretched as it was, but they've come closer together here, so that's not showing any sort of extreme. And our other sentiment indicator is backed off that extreme range. But I want to point out, remember, on Tuesday, again, we were seeing the market was stretched. It was overbought. We saw momentum was in that extreme range. Sentiment's always been in that extreme range for a while now. Breadth was lagging, which it's been lagging for a while, but this sentiment indicator was right up against that red line. Now, we recognize it could go a little bit beyond it, as it has at times, but it's at a point where it's saying a pullback is more likely, more probable. And I hope by now, if you've been following these updates for a while, I hope you're starting to apply this or use this into your own analysis, because it can't perfectly tell you when a pullback is coming, but it's pretty darn close, and at least allows you to start making some decisions. What was some of the things I did earlier? Actually, I did it last Friday on that bearish reversal candle. But remember, that bearish reversal candle was happening with the markets overbought in this extreme range. So what did I do? I bought some of those inverse ETFs. Those will go up if the market goes down. And although I haven't made very much on this little pullback with those inverse ETFs. I've made a little bit of money on the pullback, and that's something that you can apply to your portfolio whenever you can read these things I'm showing you. Bearish reversal candles in extreme overbought conditions. You can go into some of those inverse ETFs. You could tighten up stops in your portfolio on some stocks that have made a big run. You could take profits off the table, sell some of those stocks. There's a lot of decisions you can make that are going to be helpful. And again, that's the purpose of going through classes like this every week, is that you can be a more effective trader if you have more of an education. If you want to just keep it simple with the signals, that's what the software is designed to do. It's designed for simplicity, for people that are busy and they just want to give me a stock that's trending and that gives me a buy signal when to get in and a sell signal when to get out. But you can get even better results if you can apply some of these other things. You can make a little bit of money on the pullback, knowing that you can jump into some inverse ETFs and knowing when to get into some of those inverse ETFs and possibly when to get out. We'll kind of take a look at how things trade today. I might jump out of those at the end of the day. I'll show you when we get to the charts here what I'll be looking for at the end of the day. All right, so let's take a look at the charts. And here was our bearish reversal candle on Friday. Here was Tuesday. We had kind of an indecision candle. And then we are down a little bit yesterday, not huge, but down a little bit. Now it looks like we opened lower today. We opened down here. Now we're seeing a little bit of buying. And what I want to pay attention to, again, this is something I mentioned on Tuesday that you'd want to look for, is how do we, if you have a sell-off, then how does that first attempted rally look? If it shoots right back up, then it tells you the buyers are still strong and they're aggressively buying that dip. Here was the dip, they bought it, goes higher. Now again, it would push the market back into an overbought condition, and so you have to wonder how much longer that rally could last. But that action it's telling you the buyers are still in control. If it attempts to rally, see what we've had over the last couple of days. We saw this on Tuesday. The market came all the way down here. The buyers were able to push it back up, but all they were able to do is push it back up to where it opened, and where it opened was down from the day before. So it had gapped down at the open, sold off. The buyers weren't strong enough to push it just back. All they were able to do is get it back up to where it opened. Yesterday, same thing kind of happened. We dropped down to these lows. It came off the lows of the day. If you were watching this yesterday, then it faded into the close. And so the buyers were trying to buy the dip, and then the sellers kind of pushed it down. Not in a huge way. It wasn't. In fact, yesterday was a pretty light volume day compared to some of the previous days, and so it wasn't like there was a ton of dip buying and a ton of selling into that dip buying. But you started to see that a little bit. And so today, opposite happened. We opened lower, and we are trading up from where we opened. But I want to see, do we close near the highs of the day? That would be more bullish in the near term. But particularly tomorrow, again, over the next few days, if it tries to rally and is struggling, remember, it could still go up, but if it's really struggling to go up, then, that's a type of wave B behavior, kind of a sucker's rally where it's trying to go higher, or it maybe even is going higher, but it's very sluggish. It could be more sideways, more choppy. That's kind of a wave B behavior, and that probably means we're going to have a wave C that comes down at some point. So that's kind of what I'll be looking for. Another thing, and before I forget, I want to get to that, is because I mentioned this on Tuesday. If you've got another charting service, you can't pull up a weekly chart on TradersPro, but there's a lot of charting services out there. There's a lot of free ones out there. In fact, TradingView has a free version that has ads and stuff that you could use. But one thing I like to look at on Thursdays in particular is how does the weekly chart look? Now, the weekly chart is going to incorporate the entire week. Okay, so each of these candles represents a week of trading. Now, the reason why I like to do this is because, if you've learned how to read these candle formations work in every time frame. But in the closer time frames, there's more noise, and so they're not as reliable on like a 15-minute chart or even a 60-minute chart. There's just too much jittery emotion in those intraday time frames, and so that's why you see a lot of day traders. They don't focus so much on the candles as they do other type of momentum indicators that are showing shifts in momentum. They watch a lot of volume. They start seeing volume spikes, things like that. The further out you get, the more reliable these candle formations are. And so a weekly candle formation is a very strong indicator. And where it's valuable right here, or where it could be important right here, tomorrow's going to be an important day, because as it stands right now, we have a bearish inside week or inside candle. We are trading inside of last week's candle, and we're trading lower than where we opened in the week, and we knew that with the fact that we dropped the last couple of days. Now, this could change easily between now and tomorrow. In fact, we had the same thing kind of forming back here, a bearish reversal candle, but then we had a big rally on Friday that changed it into an indecision candle, and then that led to the rally week last week. But if we close and the candle looks like this today, and if we're down at all, or flat or down at all tomorrow, or even up slightly, we're going to form a bearish inside candle, and what it means is it means that the probability of having a down week next week increases. You can see back here you had a run up in those weekly candles. You had a bearish inside candle right here, and then you followed by 2 weeks of a decline at that point. Here we had a bearish inside candle, followed by another kind of indecision candle, and then but with the week after that we had a drop. You always have to allow for a pause day for these candles, or in this case a pause week that happened right here, but it did lead to a bearish week. Now, we already know the market is overbought in the longer term. In the near term, it's kind of alleviated that near term overbought, and we saw in the direction alerts. But the longer term is still overbought, and if we get that bearish inside candle, it probably tells us that there's a pretty strong probability that we get a pullback next week or within the next couple weeks. Okay. Now, if we're going to get a pullback week, I would say that next week is probably the most likely or most practical week to get it, because June tends to be a little bit more of a bearish month. July tends to be a pretty bullish month at least out of the summer months. And so, if all this is signaling is a pullback within the uptrend, it would make sense that we pull back a little bit next week, alleviate a little bit of this overbought condition, then we rally a little bit into July. Although this July might be different, and just from the standpoint of the Fed still not showing any signs of reducing rates. In fact, they're talking about 2 more rate hikes, and then you've got earnings coming out in July, and if the earnings, if these recent rate hikes really start to show in slowing the earnings of some of these companies, that could, you could see because that's what a lot of the market is waiting for is, we don't believe that the economy is in trouble until we start seeing earnings slide. Although, that's always a thing that I don't focus too much on, because there's a lot of earnings manipulation that goes on out there. I mean, I can't tell you how many times they've they'll come out, they'll have their earnings target. They'll see that they're not going to hit their earnings number, so they'll have a report that says that they might come up short, or they'll have some excuse that they'll say, oh, because of inflation, it's going to probably affect this quarter. They'll take a little bit of a hit because it's kind of it's that all the focus isn't on them like it is during their earning announcement, and then they'll revise their number down slightly, and then they'll come out and they'll report and they'll beat that revised number, and they say, hey, we beat our number, and then the stock can sometimes take off because they beat their earnings number when it was a revised number downward. There's a lot of these games that they play, and that's why, and it takes a lot of work to try to keep up with the games. You gotta try to follow each of these stocks, and when they try to slide that little negative news out there without hopefully anybody hearing it. Usually they'll do it on a Friday afternoon, so by Monday everyone's forgotten about it, or it isn't as harmful to them. And then they beat that revised number, and then they start bragging about how they beat their number. Yeah. But anyway, so keep an eye on this. It's not just the S&P, especially on the Qs as well. If we get that bearish inside candle, that could be signaling more weakness next week. And we'll talk about it on Tuesday. We'll see what happens tomorrow, and then we'll talk about it on Tuesday. But with the way the market is behaving today, it's looking more like we could rally a little bit tomorrow if it holds, that is. If it holds this kind of reversal candle that we're seeing today, particularly in the Qs here, we're seeing it. Now, I do want to show you, because we also don't have moving averages on the TradersPro software, but one thing I look at a lot of times is how far, when I talk about the market being overbought in the longer term, a lot of times what I'm referring to is how far away it is from the 200-day moving average, which is a longer term moving average. And you can see right here that it is about as far as you get away from it. And typically when you get that far away, what tends to happen is it tends to revert back to the mean, or revert back to that moving average. We saw it it happens on the way down as well. When we were on the decline, you can see that when we would get too far away from that 200-day moving average, what would happen? We'd rally back up to it. We don't have to go all the way back to it. We don't have to go above it, but you tend to get back into the area of it. The way I used to explain this was, if you ever watch a mother with her kids at a department store or something, the kids will start running around, running through the different displays and everything, and exploring around, but then suddenly they'll realize, they'll perk up, and they'll be like, okay, where's mom? And they'll see where mom is, and they'll run back towards mom, and then they know they're safe, and then they start exploring again. They start wandering out again, but they always kind of, at some point they stop and they see where mom is, and they come back towards mom, so they're in the same vicinity, but then they go back along and start doing what they want to do. So that's kind of what the market does sometimes. They'll notice it's too far away from that 200-day moving average. It'll rally back to it. Now, these aren't exact, we can't know exactly when that's going to happen, because right in here, you're still a pretty far distance away from that 200-day moving average. But when you can visually see that it's getting stretched, it'll often come back to that moving average. Here it got stretched, came back to it. Here it got stretched, came back to it. Now, it does it on the upside as well. And like I said, this is about as stretched as you can see it. It's probably as extreme as it was back here on that oversold when it rallied back up. You can see that's about the same distance. So you combine that distance with this previous high right here, this resistance area that we're bumping into. And this is an area here where you would expect it to start to pull back, and there's a lot of people that are starting to see starting to see that buying exhaustion that's starting to take place. There are some little signals there that are telling us that it could be starting. But again, you're not going to base a trade decision on that alone, because like I said, you got a little bit of a bullish candle here today. Could it push higher? It can still push a little bit higher. But what you want to recognize with this analysis is, okay, do I want to be loading up on a whole bunch of new positions right here? Or if I am going to load up, am I just trying to am I doing it because I'm just trying to capture, I got a bullish candle right here, I'm just trying to capture a 2-3 day move where it could go higher, and then I'm going to get out. You can use it to make your decision, but it's important you recognize where you're at. What are the conditions? What are all the clues around you telling you? And right now, like I said, it's getting a little bit stretched, and we need to pay attention. And then particularly in the QQQ. But remember, the Qs have been what's led this rally, and so if that starts to break down, you've got to assume that a lot of other individual stocks or a lot of other sectors and areas are going to break down as well. All right, the Dow. It's the one, well, it was down. Is it still down? Yeah, it's down slightly today. So we had a little bit of a mixed market condition where S&P and NASDAQ were up, Dow was down. I think the Russell was down too. I'll have to look, we'll look at that here. But right now, that's just kind of a little bit of an indecision candle. We had a little bit of that yesterday as well. Now, indecision candles mean it could go either way. It's just a pause or reevaluation. Qs are looking pretty strong, but again, we want to see, does that fade a little bit into the close, or does it close into the highs of the day? That'll tell us what tomorrow might more likely look like, at least the open tomorrow. Yeah, the Russell's down a little bit, but it's off its lows of the day, and if it does rally up at the end of the day and close higher than where it opened, that'd be a pretty nice little bullish hammer candle formation. So that'll be something to kind of watch. But this is why I don't, you're not going to see me make too many strong predictions off of candle formations this time of the trading day, because very often it can change, before the end of the day. And so I usually like to, if I'm basing a trade off of a candle formation, I usually like to make that decision in the last half hour of the trading day, and particularly the last 15 minutes or so, when I have a pretty good idea of how it's going to close. All right, I don't want to spend too much time on these others. We went through those on Tuesday, although bond market's looking like it's turning down. It's in that long sideways trend, but it's interesting that it's turning back down again. It was in this little range right here before. It dropped below it, rallied up to it, and then dropped down. It's rallying back up to it again, and it looks like it's starting to roll over again. Having trouble getting it back above that level there. But overall, it's been in a long sideways trend. Gold, I'll probably get stopped out of the gold trade today. I am at my stop price, but I like to wait. I like it to be the closing price, and so I'll wait till the end of the day, because if gold somehow rallies up to the highs of the day or goes higher and I'm above my stop, that'd actually be a bullish candle if it formed that, and I'd probably want to stay in it. But if it closes where it's at, I'll stop out of that trade. We've been talking about that for the last week or so, that it's probably going to end up getting stopped out. If gold can start going on another run, or even silver, I might jump back into that again. Oil, again, basically a sideways trend there. I've been trying to stay away from some of the oil stocks because they're anything that looks like it could be whipsawing. I had enough of that earlier in the year. I'd rather stick to anything that's trending right now. I'd much prefer that right now, but it's been moving sideways. The dollar tried to rally a little bit today, but it's been down. it looks like it's in the near term it looks like it wants to keep going lower. VIX keeps going down, and we'll talk about this here in a second. Chip stocks, a little bit of a rally today, but they've been selling off a little bit recently, particularly AMD. Nvidia is still holding up, but that's one that I think is probably due for a little bit of a sharp pullback. But it would probably need the market momentum to do that. But that's where I think it could tie into how we close the week. If we do have a bearish week next week, I could see a lot of profit taking in Nvidia where that pulls back a little bit. So if you're looking to get in Nvidia, if you're patient, I think you'll get a better entry point. It's really overbought right now, kind of extreme, and it's not an area where you'd want to chase it right here. Bitcoin's really been on a tear. I mean, look at the moves there that it's made. Now, again, it's at the far right side of the extreme reversal risk. So you'd want to see if this could consolidate a little bit or pull back a little bit to give you a better entry point if you're looking to get in. And there are some, you could use this stock. This is kind of a ETF kind of concept that you could trade Bitcoin without actually owning Bitcoin, just trade the price movement. But there are other individual stocks that are involved in Bitcoin that probably are better. They're a little bit more liquid trading instruments. And one of them we'll take a look at today. It showed up in the new buy list today, and we'll talk about that here in a second. But I pointed this out for a while that I felt like that November, December, this was kind of the bottom. It had everything that acted like a bottom. And then, you had like this inverse head and shoulders pattern, and then you pull back to that breakout area here. And now you're getting a really strong buying coming in right here. This really looks like it's turned the corner. Now, if the markets have a big sell-off, or if they have a panic sell-off and start to form a bottoming type process, you could see Bitcoin come down as well. It'll probably trade with the markets, but it shouldn't get below this low down here. So that's what you would look for: is does it sell off to the market but does not go to a new low? That also confirms that this is probably a bottom down here. But it had all the psychological things you would expect at a market bottom. It really, almost textbook of what you would expect a bottom to feel like. But it's also the reason why I keep saying that this market, the stock market, hasn't bottomed yet. Is it didn't even come close to any of those characteristics, and so it's really what's fueled my distrust of the rally that it's been on recently. All right, real quickly, let's go through the mega cap tech as well. Nvidia, as I mentioned, what I'm looking for here is. Obviously, here was the earning announcement, and I don't, even though it gapped up and closed lower than where it opened. On earning announcements, I don't overreact to that type of price behavior, but it did have a day right here where it had a bearish shooting star candle, closed lower than where it opened, but higher than where it closed the day before. That led to this drop right here. Remember, these candles are very short term in their predictions. They're not going to predict longer term moves. We can apply them to other chart patterns that might predict a longer term move. Then we had this rally up through here, and then just recently we've seen a bearish candle right here. That was followed by an attempt to go higher, but it didn't go much higher. And then we had yesterday what we call a hanging man candle formation, which looks like a hammer, a hammer is a bullish formation. And this, you could look at this and say, well, isn't that a bullish hammer? Well, it's where that formation it shows up. If this shows up at a bottom or after a pullback, yeah, that's a bullish, that's what we call a bullish hammer. If it shows up at the top, we call that a hanging man. It's like if you picture the Old West and the outlaws hanging from the gallows. and that's a bearish formation. Although it's not the strongest bearish reversal, I'd prefer the shooting star candle. That's a stronger bearish reversal formation. But you combine it with, this bearish candle, this bullish candle that didn't go much higher, and then this bearish candle here. It's showing a little bit of that buying exhaustion, and we already know it's a pretty overbought stock right now. Now it's trying to rebound today, so there are some dip buyers. But again, do we close off? If we really close off the highs of the day, if we have a pretty distinct tail at the end of the day on there to the upside, that would confirm that buying exhaustion. Now, buying exhaustion, it doesn't always drop. I don't like to base a trade exclusively on buying exhaustion, but it is a signal that you learn to recognize. And like I said, if we combine it with, if we end up with a bearish weekly inside day candle tomorrow, and we've got some stocks that are showing buying exhaustion, there's probably a pretty good chance they pull back next week. And if we get you might want to wait for some stronger confirmation, or you could look for some stronger confirmation that's underway. But you could look to take advantage of that. Although if I'm trading, I don't like to short stocks. So if I'm trying to take advantage of downward moves, I prefer using put options. So if you know how to use put options, that's a better way to trade. Otherwise, you just use that analysis to say, okay, if I want to buy into this, if I wait a little bit, I'll probably get a pullback and get a better entry point. All right. Next one here was Microsoft. Now, Microsoft here, we had this impulsive move down. We had impulsive up, impulsive down. And what you want to look for here is, do we rally, but in kind of a sluggish type rally? Now, today isn't overly sluggish, but I mean, you're basically technically you're still kind of trading within the range of the candle of the day before. And so it's as long as it's trading inside that range, that's not a very strong price action. But if this is kind of sluggish for a couple more days, it probably leads to another move down. And that could just be a wave C, A, B, C, and then could be taken off again. In fact, Google might have already done that. We'll see that here in a second. But Apple still holding up. I don't see any strong breakdown in Apple yet. AMD had a pretty decent breakdown, and it was it rallied off of NVIDIA's news, and a lot of the chip stocks did. Even Intel, and Intel got hammered the last couple of days because people finally were like, why are we buying Intel? Intel's not strongly connected to the AI movement right now. So I think those were the first to kind of peel off a little bit and sell off. Google, though, again, it might have had its wave C. This could have been wave A. But this is what I'm talking about. You had the impulsive up, impulsive down, and then look at the sluggish. It tried to rally but couldn't really. It was more sideways. I actually made a trade on this, trading this move down for wave C, a put option trade. Didn't make a ton on it, but a decent move. But it was probable. It was likely to happen. Now maybe it's pulled back enough to where it can start rallying again, although I wouldn't expect it to rally too much further with the index being so overbought. But that's something to keep an eye on. Amazon keeps pushing higher. Tesla had a bearish engulfing pattern on very high volume yesterday, but now the dip buyers are showing up right there and pushed it right back up again. Again, I want to see how that closes. If we fade a little bit, it tells me that those dip buyers weren't strong enough, and it could embolden the short sellers. The short sellers are seeing the exact same thing I did, which was that bearish engulfing, and it's really stretched. I can understand NVIDIA's rally. I don't understand Tesla's rally. It's purely based off of hype, but Netflix has pulled back a little bit here. So none of these have really fallen apart yet. Some of them started to pull back a little bit. So, again, we're starting to see early stages of maybe a bigger pullback, but I really want to see stronger selling in these stocks because they're the ones that they led the rally. When they start selling off in a bigger way, that's going to signal that whoever big money player out there has been holding up, the players have been holding up the market are deciding now it's time to get out, and I probably should too, or even try to profit from that drop as well. So we're going to continue to keep an eye on that. We started to see a little bit of weakness earlier in the week, but in fact, some of them have rebounded. Like I said, Amazon had a nice rally today, and Apple's still holding up, and some of these stocks are still kind of holding their ground. All right, let's go. So overall, again, we kind of understand the market conditions here. It's still possible we rally a little bit. We don't want to be too aggressive though in this longer term overbought condition. Let's look at some individual stocks. I told you under the new buys, there's a few to look at. The first one is this Riot Platforms 98 strength rank. This is a way to trade Bitcoin. They're a platform for crypto. I don't know if it's exclusive to Bitcoin or crypto, but there's a couple of these. Coinbase I'd stay away from because it's got and these other ones might get attacked by the SEC as well. They want to regulate this stuff, and they're finding every reason to try to regulate it. As I don't know, there's differing opinions on that. I don't love when governments get involved because they're so inefficient and they're not always they're not always the best solution. But then on the other side, man, when it's the Wild West, that's pretty crazy, and I don't want to be trusting. I'd like to have some sort of controls if I'm going to be investing in it. And I'm not investing in crypto, so probably my opinion doesn't matter. But anyway, this has been consolidating a little bit. Another one though is Mara, MARA is another one that's if you want to kind of a stock, if you want to trade crypto without trading crypto, kind of mirrors the movement of Bitcoin. I think we can take a look at that here in a second. But this is the one that showed up on the new buy list, 98 strength rank. But it's had this nice consolidation. It looks kind of like an ABC pattern, A, B, C. And what I like too is that you've got a trading area here. It probably shouldn't dip below this area here. I could have a tight stop, and that might be one I add today to get kind of a little bit of because I like that chart of crypto. Let's take a look at Mara here. Similar pattern, although it didn't really kind of have that wave C down, but it doesn't necessarily have to. But it's starting to take off as well. Yeah, it's a 96 strength rank, so. And like I said, I'd probably avoid Coinbase just based off of some of the regulatory problems that they're bumping into. But again, that may come to Riot, Mara as well. They might be next. Let me let's back out and look at a 2-year chart. So you can see how it kind of mirrors the Bitcoin move. Bitcoin had the big drop. It kind of bottomed here in November, December, and then since then it's been moving up, and you've seen this stock start to kind of move up the right side of the bowl, kind of what I like to see. So let's go ahead and add this one in. I mean, I don't mind the risk here. We'll have a tight stop right below this low. So about $9, and we'll say let's see, what is what is below this low here? $9.20. Let's do $9.25. So it's a pretty tight stop. Let's do 800 shares. Let's see what the risk is. Portfolio at risk is a little over 1%. Now, remember the dollar amount. If I get stopped out, I'm going to lose $1,600. It's only, I want to keep that between the risk portfolio percentage at risk. I want between less than 1 is fine, but 1 to 1.5%. I wouldn't want to go over 1.5%. We're slightly over 1% here, but you have to be able to accept the dollar risk as well. And it's $1,600 if you get stopped out. We're pretty close to this stop out point here. If that freaks you out, then all you do is just buy fewer shares. Get that down. If you cut that in half to where you only have $4,500 in the trade, it would cut this in half, and now you only have an $800 risk. Maybe that's closer to where you'd want to be. If it's not, then get that down to where you're only putting $2,000 in or something, and it's that risk is smaller. So you can adjust that, but you have to pay attention to that. And this is an area that I can't help you with because everyone's risk tolerance is different. But what you have to do is truly assume that the trade isn't going to work out. Don't approach it like it's going to work out, because that's where you get overly optimistic and you start only focusing on your profits you can make, right? How much money you're going to make. And remember, every trade you get into, you believe is going to work out, or you would never get into the trade, right? That's the natural tendency. We have to understand that psychologically about ourselves, that every trade you get into, you believe is going to work out, or you would never put the money into it. Now, the reasons for believing it's going to work out could be very sound, or it could be ridiculous. I heard some drunk guy on the train talking about it, so I want to get in it. Well, that's giving you the confidence to think it's going to work out, but it's not very reasonable to think that's not a very strong reason to believe it's going to work out. But if you're going to put money in a trade, you believe it's going to work out. Now, we know that not every trade works out. So what you have to do is you have to fight that. You have to force yourself to act like it isn't going to work out. And what you do is you really focus in on that loss and say, okay, this trade is not going to work out. I'm going to lose $1,600. How is that going to make me feel? And force yourself to feel it. Now, some of you, if you've got a $500,000 account, you're like, that's my cell phone bill for the month. What do I care? It's not that big of a deal. Others, you've got a $10,000 account. You're like, I can't afford to lose $1,600 in the trade. Okay, then you got to get that risk amount down to a level that you're okay. And I don't know where that level is, but you got to find that level where you're not going to get overly emotional if you get stopped out. Because one clue that you're trading over your risk tolerance is how upset you get when you get stopped out. If you're losing sleep or you're ticked off, you want to go kick your dog or something, punch a wall. Those are all actions that are telling you it's not the trade that's the problem. It's the risk. You're not controlling your risk. You're not getting that risk amount down to where no big deal. And a lot of people, if you ask them if you accepted the risk, the automatic answer is, oh yeah, because the natural tendency is to think the trade's going to work out. So of course I could shake this off as, I've accepted that risk because I'm thinking I'm going to make 5,000 or 6,000. Okay. But you have to really focus on that to make sure that amount is at a level you can handle. I'm going to go ahead and purchase this, and we'll see how that goes. All right, a couple of the ones in the muscle stock skins, DAKT right here, 97 strength rank. Again, just a little consolidation right through here out of a nice uptrend. It's been a nice uptrend. Now, again, the market's a little stretched. This has been going up for a while. You might only get one more little burst of a move, and maybe that's all you're looking to trade is just say, get into some of these where I can make a little bit of money on a move. Otherwise, I'd say be patient, wait. You'll probably get a better entry point on a lot of these things. But I'm not totally convinced the market is rolling over right here. It really depends on, I think, how that weekly candle looks tomorrow. If it rallies up strong tomorrow, yeah, we could push a little bit higher. Oops. Let me go back to, there's another one here down the list a little bit. This, where's it at? Here it is, GMS. Nice little up move today after a little bit of a pullback right through here. It recently broke out of that range, came back and retested it. Now it kind of broke out above here and retested it, so it looks pretty good. And then lastly, this Zeus Olympic steel. Now let's back out to a little bit longer term chart so you can kind of see, this looks like a little bit of a larger ABC correction right through here. And, if I were trading this, I'd just put a stop down below here. This is looking a little sluggish on the rally. I'd like to see a little bit more of an impulsive look to that, but, it could start to take off and go. If not, again, your risk is pretty small right here. All right, under the sectors, let's look under industrial products here. There was a couple that I liked. One is this DMRC 91 strength rank. Again, you can see pretty obvious here. It looks like an ABC. Now this could be, one thing that I'd be cautious a little bit on this one is if this is an ABC, well, I don't know. It wouldn't necessarily qualify as an irregular ABC. A regular ABC is when wave B goes beyond the end of wave A, and it actually ends right at the end of wave A. That could be an ABC. I'm always a little bit worried about irregular ABCs because they're very rare. And so when I see them, I immediately kind of naturally distrust them. And the other possibility you have to be aware of in a pattern like this is that it could be that this was the ABC for this move up right here, and that this is starting the correction, wave A, wave B, wave C. But if I were trading this, I would probably be trading off this low right here. So I just put a stop down there. And if it did come down lower, it's probably maybe just still starting the correction or what have you. You could wait for a little bit more confirmation for it to move up. In fact, it should have a hold signal right now. So you could wait for it to go to a buy signal, and it would take a little bit of a rally here to get to a buy signal. It just barely went into a hold signal. So if you want a little bit more confirmation, you could wait for that buy signal to trigger. All right. Another one in industrial products here is Wire and Encore Wire Corp. Again, this kind of looks like it's moving up the right side of the bowl. Pattern I like. and then a couple out of computer and technology. This ALCS right here, 99 strength rank. A little bit of a coming out, a little bit of a pullback there. AEHR, and finish up here with, we've talked about this one before, but Rambus. If the chip stock starts to take off a little bit, this is pulled back, a pretty nice little pullback here, kind of an ABC pullback. Nice little day today. If it could close like that, that'd be a pretty strong bullish candle there. But again, keep in mind that those chip stocks in general are still a little bit stretched. So, but you could, like I said, a tight stop below today's low or something, you're not risking very much. All right, that's all I have. We'll see how things close today, and particularly how things close tomorrow. If you need to review the recording to after tomorrow to kind of, or during the market tomorrow to kind of see what we're looking for out of that to close tomorrow. And then we'll see Tuesday. We should have a pretty good idea of what's going on and what we could do at that point. All right, thanks everyone. Have a great weekend. See you on Tuesday. Bye now.